Okay, done.
Okay. Hello, everyone. Welcome to the Pro Trade Room Plus PCE Price Index. My name is Lee Goldstein. I'm the trading director for 10-Minute Trades. Please remember, I'm not a financial advisor. It is possible to lose money trading futures, so please trade carefully. So good morning, everyone. And I also want to welcome all of our friends that are watching us on YouTube. Thank you for joining our stream. It's our weekly free stream of the week. All right, everybody. So let's look at what we're going to do this morning. Let's look at the news that we're looking at. So here's what's going on this morning. Initially, so this is the news that we're looking at this morning. We also do have Canada GDP. If anybody wants to trade Canada GDP, the approach is the trap trade on the DMM, and the approach is to wait 2 to 3 minutes for the trap to fill. It's not a gigantic profit maker. All right. It's only recently started working. So just keep that in mind. But if you want to do it, it is a valid setup. I'm going to trade personal income and spending. And the approach I'm going to take is the trap trade. And I'm probably going to be a little bit conservative this morning. Gee, what a surprise. We have 4 events this morning. So this is the only one that's not a family money trade. And it has been more difficult to trade over the past 6 months. This had been a gold breakout. We're looking at the euro. And, I'm a little bit concerned about the euro, especially after yesterday's poor move. You don't want to panic. Yesterday was a poor move on GDP. It doesn't necessarily mean it's going to follow through, but I'm not a lover of the euro setup, to be honest. In looking at my testing, I'm going to trade the gold trap trade. So, we've got 4 events. Chicago PMI, definitely trading that. I'm trading this because I'm going to trade it conservatively, and I'll explain how I'm going to do it. If I were going to, let's look at the DMM. So this report has been moving. We have a spike sheet for it. And, it got smaller last month. It only moved 28 ticks, but it's been fairly consistent prior to that. All right. Fairly consistent prior to that. The setup that we're going to use today would have been safe all the way back to 6:30 more than a year ago. Okay. So I'm going to use a setup today that would have been safe. I'm not saying it would have been profitable. I'm saying it would have been safe and survive the initial move of the news. Okay. And then many of them have been profitable. We did have a cancel in April. Okay. Um, and actually, it depends too on what the trap was. We have been changing our settings because of different markets. So right now, 25 and 40 is a little bit conservative. I'm actually going to increase it slightly and do 30 and 50 with a stop of 20. I'm going to do 30 and 50 with a stop of 20. There is no DMM for Chicago PMI, Roz. There is no DMM. We'll have plenty of time to go over the setup. Plenty of time. Okay, so if you look at last month on PCE, it was not a gigantic move. Last month was one of our small moves, but with everything that's going on in the markets, government shutdown possible, um, the market's selling off very heavily over the course of this month. I think there's increased volatility. And what's the worst that happens if your trap trade is too big? Usually, the worst that happens is you don't get a fill. So we're not going to go cry in a corner if we don't get a fill. We'll just move on to the next trade. That's all. So I'd rather trade it a little bit conservative today. And if we don't get a big move, then we won't get a trade. If we get a big move, then we should be able to weather the big move. All right. So that's my thinking. Last month, we tried a breakout and it was a very small profit and it was a fantastic reversal. All right. It might not have filled us last month, but it was the smallest move in many months. So I think it's not going to be that small. If it is, again, it just won't fill us. Okay. And if you look, the reason I'm not overjoyed with the euro is the euro did not have a very good move last month either. Now, look, sometimes you get a month where nothing has a good move. You don't want to make a complete decision based on just 1 month. But on this report, we are definitely struggling to find a great setup. It has not had a great setup in a while. That's being honest, okay? The report has struggled somewhat. So that's important to know. And then a quick heads up on Canada. Canada GDP. It's a trade that hadn't worked for a very long time, and we stopped watching it. And September 1st, it really took a while to fill, and that's what we noticed. It takes a while to fill. All right, now I sped that up. Okay, so that was already 30 seconds. So don't get fooled by the time it takes to fill. And when it does fill, then it really meanders a while. And it had a great sell-off, but it took more than 3 minutes, okay, on September 1st. It took more than 3 minutes. If you fooled around and tried to manage your way out, it would have stopped you out with a tiny win, maybe a tick or two. You had to be patient to make the trade work. And that's what our testing showed, that if you're going to trade Canada GDP, you need to trade it and wait 2 to 3 minutes for the trade to eventually reverse. And you could see 3 minutes in July, and it was not a spectacular reversal. It did reverse, not spectacular. So I'm definitely going to watch Canada GDP. I'm going to trade the trap on PCE price. We have a very good zone of safety. Whoops. We have a good zone of safety. My tier 1 is 30. My tier 2 is 50. And my stop is 20. So that gives us 70 ticks of safety, right? 70 ticks of safety. And when you look at our spike sheet, how much did this report spike? On these reports, there's plenty of room with a 70. Now, you could shrink it 25 and 45, right? Instead of 30 and 50, 25 and 45. But again, I'm thinking potential volatility because of the markets. And the worst that could happen, like we said, worst that could happen is it totally blows up. I mean, that can always happen. It shouldn't. But more commonly, you might not get a fill. Okay. And David's asking, how was Nike yesterday? Very disappointing, David. We didn't get filled. It didn't really move the market. Was completely different than our testing. So we just did not have a result. Nothing happened. Absolutely nothing happened. So trading conservatively today, the time of the event, going from the beginning, let's start from beginning to end on the trap trade. Click on the trap trade strategy. Tier 1 is a 30. Tier 2 is a 50. The time of the event is 8:30. Account warnings are off. I'm going to label it gold. And I'm going to trade it. And then position size 1 is a 1. Position size 2 is a 1. And the stop is 20. And that gives us 70 ticks of safety. And I think what I'll do is save the template. PCE, today's date. PCE, GC, today's date. And there's my first setup. And then on Canada, let's look at the trap. Give me 1 second, sorry. Now, like I said, I'm not overjoyed with the euro on PCE price. So I would go with the trap or just watch. There's 3 more events. Canada GDP, just remember to wait more than 2 minutes for the trade to fill if you trade it. And I would use 13 and 22 on my tiers. 13 and 22. Stop of 20. Prep 5 seconds. All right, it's a trap trade if you're going to do it. So I'll set it up in sim here. I'm not trading both at the same time this morning. So Canada GDP. And you can use, believe it or not, we've tested this also with a stop of 15. I think a stop of 15 is probably okay, but I'll do the 20 because that's what we said. So it's position size 1 is a 1, position size 2 is a 1, stop is 20, 13 and 22 on the tiers. The time of the event is 8:30. And the prep, what does the prep mean? The prep means that's when the orders go on the chart 5 seconds before the time of the event. 5 seconds before 8:30, the orders go on the chart. Okay, that's what that means. And then let's go over our, there is no increased margin. I checked this morning. I did not have any emails. I checked Ninja's website. I did not see increased margin. If I made a mistake, in all honesty, they won't let us trade. The margin won't be there. But I checked multiple places, so it does not appear to be a margin trade. Core PCE, so position size 1 is a 1, position size 2 is a 1. That means one contract on each. One contract on each tier. Okay. 30 and 50. 30 and 50. Stop at 20. 8:30 is the time of the event. 5-second prep. And we'll check our time sync. And then we'll keep an eye on the news as well. These are all the elements of the news. It's nothing out of the ordinary. It's what we expect. I'm going to keep it off to the side so we can watch Canada. They are expecting moderation in prices, okay? Expecting moderation in prices. And we'll check our time sync by going to the website time.is, computers in sync. I do want to thank everybody that's watching us on YouTube. If you'd be kind enough, hit that like button for us and give us a like for streaming for free, and we'll keep streaming. So gold is opening right now. That's why you're seeing a little bit of volatility in gold. The market is opening. It is a rainy, overcast, miserable day in Pennsylvania today. So we'll see. You know, the important things in the news, the price index, they're actually expecting it to be a little bit higher than last month. Personal income and spending, has an effect on this report, but not as much as the price index. All right. And the year over year, they are expecting it to moderate below 4%. So that would be good if we can get inflation to appear to be moderating. And I say the word appear because it certainly does not necessarily really feel like inflation is moderating. It's hard to say what's going on. But many of the things that we buy and use seem expensive, right? So we'll see. We'll see. The idea behind the trap trade is we expect a move in one direction, and then we expect price to change direction. That's what we're looking for. Who's trading? Who's trading what? Type in what you're trading, what you're doing on this report. Type in what you're doing. David, GC, Sander, MGC, Doc's GC. Doc, you doing a breakout? Usually you do breakouts, from my understanding, I'm thinking. If I were doing a breakout on gold, for instance, I would probably use at least a 15 tick bracket. And probably if I don't get a reasonably quick fill, I probably won't wait around for a dribble type fill on PCE price. If it's not a good burst, then I may not wait around for a fill, because it is the kind of trade that generally fills quickly. Eva, you have not been around in a while. How you doing? Was thinking about you yesterday. All right, so we've got about 5 minutes to go. Oh, okay. Where'd you go? Russia? Okay. We got 5 minutes. 5 minutes. Illinois, Florida, and Tennessee. It's quite a mixture. All right, folks. So we're just waiting. Right now, we're just waiting. And, normally, if it's a margin event, the evening before, AMP sends an email. Okay. So if they haven't sent an email, then it's not a margin event. Okay. And Ninja also puts it on their website. So it's always about this is a report that is so important what the news is. And there's different elements to the news. I used to think when I first started looking at this report that it was the personal income and spending that was the more important part of the news, but it's not. It's the price index. at this point in time, the price index is the more important part of the news. All right, so I do hear news being spoken into my headset. So, there is a fair amount of data that's going to be looked at. You've got personal consumption, which is a small part, but you have retail inventories, personal spending, the price index year over year, and month over month. Okay. So we've got a high of the day that if it hits the high of the day, will get filled on our first tier. Okay. That is about 32 ticks away. Right now, it's 32 ticks away. Okay. I think there's certainly a possibility it could burst to the high of the day. Chantal, you trading? Or are you mad at me because we screwed up the streaming? So thanks again, everyone, for joining us on the stream. It's early. We have a nice group watching us this morning. So we're using a setup we call the trap trade. If the market goes up, we're going to sell the market. If the market goes down, the gold market, we're going to buy it. And we're also watching Canada GDP. So if it's a small move, I'll just probably cancel. Don't forget your buttons on the trap trade. Cancel the outer tier, right? Combine orders, break even. Our orders will show up right about now. Okay, the news is out. And it's not a very big move. Not a very big move. It's as expected. It's as expected. It's probably going to go to the high of the day. I probably wouldn't really want to be filled unless it goes to the high of the day. It's not a big enough explosion for what we were looking for. Okay. It's not what we were looking for. It would have been a decent breakout. Would have been a decent breakout. I'm going to cancel the US trade. I don't want it to just push and push and push. All right. The news, a lot of it is agreeable. I don't think it's going to get to our fill anyway, but I would want to be filled above or right at the high of the day. Our tiers just weren't big enough. They just weren't, weren't small enough. So we'll adjust them down. I'll adjust them down next month. No crying in a corner. Remember what we said? No crying in a corner. So I would actually cancel both. I would cancel both. Now, you're not getting a big change in direction yet. Let's watch. So the news, what's interesting is almost all the news is matching. That's unusual. I mean, point 4, point 4, 3.5, 3.5, point 4, point 5. All of it so close that because of that, we just did not get a very big move. You know, it wasn't a bad move. Wasn't a bad move. You know, if you think about it, looks like it was 20 ticks in that ballpark, 20-ish. Not enough to fill a safe trap. That's the reality. If we would have gone a pretty much smaller trap, then it would have been possible. We could watch the video and we can determine exactly what the spike was. I don't know if Chantal's here. Chantal, if you want to tell us what the spike was. It was not nearly as big as I thought it was going to be. And then also the news, there was a reversal, obviously, but the spike wasn't big enough to fill our safety trade. Okay. And part of the problem is definitely look at the news results. And the same thing similar with Canada. Canada, you know, you didn't have a very big move, you know, went right to the high of the day, just not a very big move. Okay. And the news was very close to what was expected all across the board. All across the board. I don't think I've ever seen so many elements of one news report that were so similar. So, yes, gold reversed, and it was a great trap trade, but it would have had to have been a much smaller setup. And then let's look at the euro. I'm guessing. So when you don't have a good news result, you know, you often don't get a good move. So the euro, the trade candle, that's not the kind of trade candle you want to see. You want to see it without wick and not at the bottom of the wick and not at the top of the wick. Obviously, it's always dependent upon the bracket, whether or not it would have been safe. Okay. I think, let's look at the video. Let's look at the video. So hang on. Give me a second. The news, truthfully, prevented a great move. That's the reality. The news prevented a great move. And that's what happened. If you look at the size of this candle, the whole complete size of this candle, 1885.50 to 1889.50, that's 40 ticks. Okay. That's 40 ticks. But depending where price was at the time of the event, that's going to determine the spike. Okay. The whole candle is actually exactly 40 ticks. Let's take a look at the video. So give me a second. All right, so let's see. Where was price at the time of the event? So I'm watching the left. All right, so 1886.70. 1886.70 was our center of gravity, okay? And then our fill would have been 30 ticks away from that, our initial fill, 1889.70, right? And it just, maybe it just barely, maybe just barely would have gotten there. My concern was keep bursting up above the high and keep going. That's always the concern with a trap. I like to get filled more often than not above the high. So our center of gravity, one more time, was 1886.70. It looks like 1886.70. So we used tiers of 30 and 50, right? 30 and 50. We were 2 ticks away from getting filled. The fill would have been 1889.70. So in retrospect, going with the smaller trap would have been safe. Okay, using a trap, say, of 25 and 45 with a stop of 20 would have absolutely been a perfect setup. So definitely moving forward, because we've had 2 events that have not had great fills, if fills at all. We have to definitely shrink the trap, because even with all the volatility potential that's going on, we would have missed our fill by 2 ticks. 2 ticks. So too conservative, definitely too conservative. And you had plenty of time to get out. Look how it just went right to the PP. That's just amazing. That's absolutely amazing. Okay, everyone, I want to thank everyone for watching on YouTube. We're going to close our stream down. If you feel like hitting the like button on the way out, we'd appreciate it. Thanks for watching us on YouTube. We'll see you next week on our stream of the week.